Hello and welcome back to our second demo video. In this video we're going to go over problem 14-2B. This is identical to your homework problem 14-1A. Now, what I did here before I hit record was I went ahead and I created the journal. You see that over here on the left with the date, account, debit, and credit. And then I created our T accounts, right, for preferred stock, common stock, paid in capital in excess of par, preferred stock, paid in capital in excess of par, common stock, retained earnings. And then I know that we're going to hit cash dividends and stock dividends. So I just went ahead and created those. How did I know that? Well, because I read the problem and I know it's pretty much identical to the one we did before. Okay, so let's go ahead and look at what we have here. And again, if you don't have the Chapter 14B problem PDF pulled up, please do that or print it, whichever works better for you. I don't care, just as long as you have it in front of you and you work through what we're doing. Okay, so they tell us that we need to journal the transactions. We need to do the closing entries for net income and the dividends, right? And remember, if you don't know this, put it on a note card. Cash dividends, stock dividends, whatever. Any kind of dividends, they decrease retained earnings, okay? We need to post everything, right? Which kind of already started to do that. And then they want us to prepare the retained earnings statement for the year, as well as the stockholders' equity section for the year. So we're dealing with Holt Incorporated. So on July 1st, it says declared a 50-cent cash dividend per share on common stock. Okay, that's easy. What do? Well, you've seen it in the last video. Hopefully you picked up on it in the lecture videos. We have to debit cash dividends and we have to credit dividends payable. Okay, so I'm going to go ahead and do that, right? On July 1st, I need to debit cash dividends and I need to credit dividends payable. Okay, so now we got to figure out what exactly we're paying, right? How many shares do we have? Well, we don't know, right? We don't know that. But they give us enough information to figure it out, right? They said that for common stock, we have a total dollar value of $900,000. Sorry about that. Come on. There we go. Okay. $900,000. Right? That's the total value of our of that of that common stock account, right? We know that. We know that the par value is $10. So if we divide by $10, that'll give us the number of shares, right? So that should be what, 9,000 shares if my math's right? We then need to multiply that by the dividend. Well, the problem says we're paying out 50 cents. So 9,000 times 50 cents should give me 45,000. And the same thing for dividend payable, okay? So I'm going to go ahead and post these cash dividends to my cash dividend account, right? So I'm just going to post 45,000 because I'm paying a cash dividend, okay? Now look what happens on August 1st. We discovered a $72,000 overstatement of 2016 depreciation on equipment, okay? Telling us, don't worry about the taxes. Okay, so let's think about that. What's going on, right? What did we do? Well, what's overstated? A $72,000 overstatement of depreciation on equipment. So that means that our accumulated depreciation back in 2016 was too high. We need to lower it. How do we lower accumulated depreciation? Well, we do that with a debit. So I'm going to say on August 1st, accumulated depreciation on the equipment was $72,000 too high. I need to decrease that. So I'm going to debit it $72,000. Now, what's going to be my credit? Well, let's think about this, right? If my expenses are too high, that means my net income is too low, right? Remember the caveat or the hitch is that net income closes to retained earnings. So because my retained earnings was too low in 2016, that carried all the way through until August 1st, 2017. And I said, I made a mistake. I need to fix it. I'm going to decrease my accumulated depreciation and I'm going to increase my retained earnings. How do I do that? Well, with a credit, right? Retained earnings increases with a credit. Retained earnings is going to be credited for $72,000. And I'm going to post this, right? So if I look at my retained earnings account, it's $500,000. That's the beginning balance, right? That's not correct. That $500,000 should actually be higher, right? It should, because we made a correction based on a previous error. So we should be starting with $572,000. So I'm going to post this debit, or I'm going to post this credit of $72,000. And we're good, okay? Now, I need to go back to the problem and say, okay, well, what's the next thing that happens? Well, September 1st, we paid the cash dividend that we declared on July 1st. Okay, easy. What's the journal entry? You should know this because I told you to put it on a note card because it never changes, right? Whenever we pay that dividend, we need to show that again, this is September 1st, we need to show that that payable that we established is decreased. And since we paid the cash dividend, we hit our cash account has to go down. So I'm going to debit dividend payable for the amount of $45,000. I'm going to credit cash for the same amount, $45,000. Okay? On December 1st, we declared a 10% stock dividend on common stock when the market price was $16 per share. We just covered this in the last video, right? It's a small stock dividend. What's the journal entry for small stock dividends? Well, I need to first date it, December 1st. That's when we declared. I need to debit stock dividends. For how much? Well, that's easy, right? I know that I am paying 10%, right? I have 90,000 shares of stock, right? I know that because I took the 900,000 divided by the 10. It's got to give me the 90,000 shares, right? 10% of that is 9,000. So 9,000 shares of common stock is going to be paid out. At what price? Well, it's a small stock dividend. So hopefully everybody's saying, I got to use the market value. $16. The total is $144,000. Now, I need to credit common stock dividends distributable to show that there is I'm increasing the number of shares of stock outstanding. And since I use the market value, There's going to be a difference between the market and the par value. I need to hit the paid in capital in excess of par account. Okay, so I'm first going to credit my stock dividends account for how much? Well, that's easy. I know I have 9,000 shares. At what price? Well, it's going to be at the $10 per share, the par value. Oh, sorry. So that gives me $90,000. Okay. And bear with me here. We're saying stock dividend distributable, right? Because it's a liability. We have to distribute this stock. We owe our stockholders more shares. Okay. Then I need to credit my paid in capital. Paid in capital in excess of par. This is common. So I'm going to credit it for the difference, which is $54,000. Oh, $54,000. Okay. I'm going to post this now, right? I'm going to post this journal entry. So what do I have? Well, stock dividends. It's being debited for $144,000, right? I'm going to post that. I'm only worried about the equity accounts here. That's why I'm not posting any of the liabilities or anything like that, right? Or the cash, the assets. I'm not hitting any of that. I'm only going to post the equity accounts, okay? The paid in capital in excess of par preferred, right? I'm crediting that how much? $54,000. I need to post that. So I'm going to post that credit to the $54,000. Okay? The next journal entry we have is on December 1st. Or I'm sorry, December 15th, excuse me. We declared a 7% cash dividend on preferred stock payable January 31st. Okay, no problem, right? I got to pay a cash dividend, right? This is preferred dividends that I'm going to be, or these dividends are going to be paid based on the preferred shares, right? So I need to date it. We declared it on December 15th. And how much of the dividend am I paying, right? Well, 7% cash dividend on the preferred stock, right? So what I need to do is calculate that dollar amount, right? Well, first of all, how many shares of preferred stock do we have? Well, think about it. It has a par value of $100,000. The total dollar amount is $600,000. So, I'm going to come down here and work out the calculation, right? So the first thing I did was I took the $600,000. That's the total value of that account. I divided by the par value, which is $100. That gives me 6,000 shares. Okay. Those 6,000 shares, I need to calculate what the dollar amount is. Well, the par value is $100 times 7%. Okay. So if I take my number of shares times the percentage, which is based on par value, ends up giving me $42,000. That's the amount of the journal entry, okay? So I'm going to credit cash dividends for the $42,000, and I'm going to credit dividends payable for the $42,000, okay? Now I need to post this cash dividends, right? I have a cash dividend for $42,000. It's a cash dividend, okay? It doesn't matter if I'm paying it on preferred or if I'm paying it on common stock. We still post to the same account. Because it's a cash dividend, it has to be posted to the cash dividend account, right? We don't have cash dividends preferred, cash dividends common. We don't care, right? We just want to know in total, what are our cash dividends? So I'm going to post that $42,000 to my cash dividends account. Dividends payable, it's a liability. Don't need to worry about it. We're not going to post it, okay? The last thing we need to do is calculate, or not calculate, it's already calculated for us. We need to post the net income, and we need to, let me rephrase that. We need to close our accounts, right? We have net income already calculated for us of $350,000. So behind the scenes, we already closed revenues and expenses to that income summary account, right? We learned that in Accounting 1. Now what we're doing, now what we're doing is we're closing that income summary account. So that's the first closing entry we need to do. So I'm going to say December 31. We need to close retained earnings. Now, we have net income, right? So the income summary has a credit balance of $350,000. We need to close that. We close it with a debit. So I'm going to debit income summary for the $350,000. And I need to credit retained earnings for $350,000. Okay, I'm going to post this to my retained earnings, right? Here's my retained earnings account. I'm going to post that credit of $350,000. Okay. The next accounts that we need to close are the cash dividend accounts and the stock dividend accounts. Okay. So let's just focus on the cash dividends. Got to close that account because it's a temporary account. So it has a debit balance, right? Let's go over here and calculate it for us. So we have a debit balance of $87,000, right? Obviously, we need to credit that. We need to post this entry to the retained earnings. So we need to debit retained earnings. Why am I debiting retained earnings? Because cash dividends, all dividends, decrease retained earnings. How do I decrease retained earnings? With a debit. So I'm going to debit retained earnings for the $87,000, and I'm going to credit cash dividend account for the same amount, $87,000. Oh, sorry. I'm going to plug this in, or I'm going to post it rather. So, what is my balance now after this closing entry? 0, right? We're getting the cash dividend account ready to start accumulating dividends that we pay in the next year, right? Now I need to post my retained earnings. It has a debit of $87,000. I need to post that to the retained earnings ledger, or in this case, we're using the T account. Next, I need to close the stock dividends. Well, let's look at the stock dividends. It has a balance of $144,000. So I need to close that stock dividends. I close it to retained earnings. So you got to know that, right? If you haven't grasped that concept yet, please put it down on a note card. Make sure you understand that all dividends are going to decrease retained earnings. So I need to debit retained earnings for the $144,000. Oh, there we go. And I need to credit my stock dividend account for the same amount, $144,000. I'm going to post this. I posted my credit to stock dividends. What's my balance? 0. So I am ready to start collecting or accumulating stock dividends that are paid in the following year. Okay, got to post this stock dividend to retained earnings, so I'm going to debit retained earnings for $144,000. Okay, now I can go ahead and calculate the balances of all these accounts, right? Bear with me here. Oh, forgot to post my stock dividend distributable account, right? I posted my paid in capital. So this December 1st, I need to go back, right? I posted the stock dividends. I posted the paid in capital in excess of par common, which looks like I posted it to the wrong account there. Needs to go to common. Okay. And I need to post the stock dividend. No, I don't. Yeah, I do. Okay. So, what we have is our accounts, right? We have everything all calculated out, ready to go. So we're good. We can go ahead and do the retained earnings section, right? So I'm going to come up here. And again, I'm picking an arbitrary amount. I'm going to go 5 rows here. I'm going to merge and center. Click and drag down 3. So what's the name of this company? Well, this company that we're dealing with is Holt, right? So Holt Incorporated. What are we doing? Well, we're doing the retained earnings. And for what date? Well, for the year ended December 31, 2017. Okay, so now what I'm going to do is I'm just going to click 3 columns here. Okay, merge and center, left align, click and drag down. Again, I'm just choosing an arbitrary amount just to make sure we got enough room. Okie dokie. So now what we're going to do is create our retained earnings section, right? So since we had an adjustment here, right, and we need to kind of remember the journal entries that we made, right? So we're going to start with our beginning balance. So the balance as of January 1, as reported, is the $150,000 beginning balance. So I'm going to post that right here, or report that right here. Okay, we made a correct. We need to make, or we did. We made a correction, right? So I'm going to put that in there. I'm going to show that, hey, we had a correction of 2016 depreciation, right? Our depreciation expense was messed up. In 2016, we carried it forward. We recognized the error. Now we're going to change, or now we're going to fix it. That was 72. Bear with me here. There we go. $72,000. So if I add all these up, I get $572,000. Guess what this is? Balance as of January 1 as adjusted. So we're telling our stockholders we made an error in 2016, 2017, we caught our error, we fixed it. Here is the new balance as of January 1st. Okay? So, excuse me. Next thing we need to do is to add all of the accounts that increase retained earnings. Well, net income increases retained earnings. So I'm going to report my net income line right here. Net income. And it's $350,000. That's a journal entry I made. So then I'm going to add this up, right? What's my, how much do I have in retained earnings before I factor in all the dividends that we paid, okay? So now, this is where we need to remember kind of how did we pay these dividends, right? Because we have basically we have 2 cash dividends that we paid, and then we had a stock dividend that we paid, right? So I'm going to add up all these cash dividends, stock dividends that I posted, right? So the first dividend we had was we had a cash dividend on our common, and that cash dividend on the common was $45,000, right? Bear with me here. Okay. Then we paid a stock dividend of common for $144,000. Bear with me, I want to get rid of those zeros. Okay. And then we paid a cash dividend, preferred, for, what was that, $42,000. Okay. So then we can add all these up, because these are my decreases here. Of $231,000. So what's the balance of retained earnings at December 31st? Well, that's easy. $922,000 was available. Of that, I paid out $231,000. I get $691,000. I need to put my double bottom border here to show that this is the end of this report. And I'm going to say balance December 31. Okay. Now, excuse me. The next thing that we need to do is to go ahead and create the retained earnings section, or I'm sorry, the balance sheet, the partial balance sheet. Okay. Here's how you do it. I'm just going to do it right underneath here, and I'm going to click Merge and Center. Drag down 3, because I want to show that this is a new report. So it needs to have a new header. Okay, so we're dealing with the Holt Incorporated. This is the balance sheet. Well, actually, it's a partial balance sheet. And what's the date? Well, the date is December 31, 2017. Okay? Now, work with me here. Okay? Please pay special attention to how we're lining things up and going from there. Okay? So, I'm going to click just 3 lines, or 3 rows here. I'm going to click Merge and Center. I want to left align all these. Click Wrap Text. And then we're going to click and drag down. Again, I'm just picking an arbitrary amount just to make sure we have enough room. Okay? So, what's the first header? Well, the first header is, this is the stockholders' equity section. So, completely left aligned, stockholders' equity. Now remember, stockholders' equity section is made up of paid in capital and retained earnings. Okay, so I'm going to indent once, and I'm going to say, here's my paid in capital section. Okay, What's in my paid in capital section? Well, I'm going to have capital stock and I'm going to have additional paid in capital. So I'm going to start with the first header. I'm going to indent 3, 1, 2, 3, and I'm going to say capital stock. Okay. Now I'm going to indent 4, and I'm going to list all the stocks that we have. Okay. So the first thing I'm going to list is our preferred shares. So we have 7% preferred. Stock. It has $100. $100 par value. How many shares do we have outstanding? Well, we have 6,000. There were 6,000 shares that were issued, right? They're issued and they're outstanding. Okay. I'm going to bring us down just a little bit so we could see everything. Okay. So what's the dollar value here? Well, I'm coming all the way over to the S column here. Remember, there's no debits and credits, right? We have to know in our head, is it a debit balance or a credit balance? We're just reporting, okay? So we want to kind of make it nice and neat so our shareholders can see what's what, okay? The value of that account is $600,000, okay? Now, the next thing we need to list is the common stock that we have issued and outstanding. Okay, so I'm going to indent 4, 1, 2, 3, 4, and I'm going to type in common stock. It has a $10 par value. How many shares do we have? Well, we have 90,000 shares that are issued. Okay. I know some of you guys are right now just freaking out, having questions. Wait. I'm getting there. Just relax. I got you. Okay. So what's the amount of the common stock par value? Well, we started off with $900,000. Okay. Now, we paid a stock dividend, right? Or common stock dividends distributable. We still have a balance in that account, right? We're not going to pay those, or I'm sorry, we already paid those, right? Wait, did we? Bear with me here, I'm sorry. No, we did not pay them out. It just says that we declared them. We didn't pay out that stock dividend. Okay? So what we need to do then, instead of posting it to our common stock, we should have actually had another account. Oh, sorry. Which is our stock div distributable. And we should have had the 90,000 there. Okay. So we created this new account. So let's go back to our balance sheet, right? Within our balance sheet, we're going to notate this, right? We're going to say that we have, bear with me. Okay, I'm going to indent 4 times, 1, 2, 3, 4. And I'm going to say we have common stock dividends distributable. Just a little bit more. Okay. That's the 90,000. Okay. That was my error. I apologize. See? Everybody makes mistakes. It's okay. We didn't pay those out, so that's why we needed to create that account, which I didn't, but it's there now. Okay? So from here, what do? Well, we need to add all these up, right? We need to add up the value of our common stock, right? And we have 990,000. So now I can report what the total capital stock section is valued at. I'm going to indent 5. 1, 2, 3, 4, 5. And I'm going to say total capital stock. And I'm going to add these up. And I get 1,590,000. Okay. Now, within paid-in capital, remember, we have our common stock, but we also have our additional paid-in capital. So I'm going to indent 3 times. 1, 2, 3. And I'm going to type additional paid-in capital. Okay. Now, within this additional paid-in capital section, I have 2, right? I have the excess of par preferred and the excess of par common. Okay. So what I'm going to do is I'm going to go ahead and find what those balances are and just plug them into the balance sheet. So I see that for preferred, paid-in capital in excess of par is 100,000. For paid-in capital in excess of par for common is $254,000. $254,000. And I'm going to make that so. Boom. Okay. So now we got to put it on the balance sheet. Excuse me. So I want to indent 4 times. 1, 2, 3, 4. And what account is this? Well, this is in excess of par preferred stock. And that's $100,000. And I also have the in excess of par common stock. So I'm going to say 1, 2, 3, 4 in excess of par common. And the account balance on that is $254,000. I can now add these up. And I get $354,000. Guess what this is? This is the total paid-in capital, okay? So, I'm sorry, that's what I'm going to calculate now, the total paid-in capital. So I'm going to add the total capital stock with the total additional paid-in capital section. I get $1,944,000. That amount is the total paid-in capital. So indent 5 times. 1, 2, 3, 4, 5. And I'm going to say total paid-in capital. And I have my amount right there. Okay. Now, remember, within the stockholders' equity, we have 2 sections. What are those 2 sections? And I hope everybody's saying paid-in capital and retained earnings. So I want you to indent twice. 1, 2, and type in retained earnings. Okay. What's my retained earnings? Well, if I go to my account, I need to add everything up, right? So what I'm going to do is I'm going to add up all my debits. Actually, I don't like that. And I'm going to subtract all the additions, or I'm going to subtract all the debits, which I need to add up here. I get $691,000. That is my retained earnings. So I'm going to plug that in right over here. And now I can report the total stockholders' equity. So indent 5 times. 1, 2, 3, 4, 5. And say total stockholders' equity. And that is going to be the total paid in capital plus the retained earnings. And I get $2,635,000. To make this correct or in proper form, I need to put my double bottom border to show that I footed this column here. Okay? And that, my friends, is how you do problem 14-2B. You now have a template, if you will, or a example of how to do your homework problems for 14-2A. Okay? If you need anything, you know how to get a hold of me. I'd be more than happy to help you out. Don't forget, every Monday, Wednesday, and Friday from noon to 1 Eastern Standard Time, I do have office hours, so I will be there on Friday between 12 and 1. Pop in. If that doesn't work for you, text me, email me, let me know, and we'll set something up for you. I'm not going to answer all your questions. All right, so thanks for tuning in, and we'll see you next week.